Hi guys, welcome to today's trade of the day. And for today's trade of the day, I will be looking at gold. Right, gold has on the weekly, it's a very interesting configuration. Actually, on the 4 hours, on the weekly, there's nothing much to see. Right, even on the monthly, it's just seemingly very bullish. Okay, so let's just start off with the daily. All right, I'll start off with the daily because I saw sort of an interesting configuration on the 4 hours. All right, so on the daily, what is very clear is that this resistance has clearly become a support, right? So price already broke above and tested it multiple times, right? Looks like we are coming back down to test it the fourth time. Okay, so very quickly, I'll just put my daily support at this level. Okay, I'll call this the daily support. Okay, now that I have the daily support, I want to look for the daily resistance. Okay, so graphically speaking, of course, I'll just take this spike where price has spiked to as the highest level for daily resistance. Now, why do I take the spike? It's because if I were to look left, right? If I were to look left, there's no other reference. Okay, there's no other reference. There's no strong resistance, no strong graphical support for the longest time. Okay, all the way. You see, if I look left, this is the only level, but that's all the way in 2012. Okay, so that's a bit too far, and right now the markets are a bit complicated, so it's best we take things step by step. Okay, so on the daily, we have the daily resistance, daily support, and price is right now in the middle, right? It can go higher or it can go lower. However, I'll just let you guys know why my preference for it to go lower is stronger. Why am I leaning more towards the bearish side? Okay, so let's go down to the 4 hours. Okay, on the 4 hours, this is what we see. So let me just tidy things up. Okay, let me just tidy things up. Okay, and zoom into the current area. Now, back in April, right, a lot of people were saying that, okay, if you connect all these highs, right, and then all these lows, gold is somewhat in sort of a pennant pattern, right, and there should be an explosive move upwards. Okay, the moment price exits the pennant, there should be an explosive move upwards. However, the explosive move stopped here before showing a very strong rejection, right? Especially when we are in an uptrend, what we want to see is lows, higher lows. Okay, we want to see highs and higher highs. However, when we connect all this, we see that price has actually broken back below instead of making a higher low, okay, and a higher high. Okay, price right now is actually making a high, low, lower low, a lower high, and a lower low. So if you connect all the tops, okay, right now we have a lower high. We should expect price to come back down and make a lower low. All right, and because of this weird configuration where price immediately rejected, I would say that this pennant formation took a lot of people by surprise. Okay, so now that we know that price is sort of in a downtrend, what can we do? We shall draw a trend line to connect the highs. Okay, and what else we can do, just zooming in on this area, is we try to touch as many wicks as possible, or we can even cut the wicks, but try not to cut the body, right? So, but like that looks quite nice. We see that price actually tested this trend line once, twice, came close a third time, and now tested it a fourth time. And every time price tests the trend line, right, it's always at the 78.6, 76.4, or the 61.8 retracement. Okay, so we take a retracement. Just let me show you guys from the high to the low. Okay, from the high to the low, and we see that price over here actually tapped the 61.8 level, right? Okay, so let me just do the retracement again. Okay, and the recent one, high to the low, we see that price actually tapped the 78.6, okay, and it's actually hovering around the 61.8 area. All right, and just nicely, the negative 27.2 retracement ratio falls very closely to the daily support. Okay, so these are the levels that I want to highlight, right? I want to highlight the 78.6 and the negative 27. Okay, so there we have it. All right, now that we're on a 4-hour, this can be the 4-hour resistance. And of course, because I said on the daily, I have a bearish bias, right? This can be, price can make a push down towards the daily support, which can also be our 4-hour support. All right, so we have a 4-hour support and a 4-hour resistance. Okay, we also have this sort of a zigzag manner. Okay, so let's see how far price can go down. If this was a zigzag and we use the extension, 0.1 to 0.2 to 0.3, and then we open all Fibonacci ratios, right? This zone here is actually very close to the 100% and the negative 27.2. If I were to extend it all the way back, it's actually at this level as well, right? So I would prefer to just take the negative 27.2, keep the chart clean, right? And this is my bias that price would actually react and drop all the way down to the 1680 level. Okay, another thing that I want to point out is we can use indicators, right? Let's look at moving average. We'll take exponential because we want more weightage on the recent prices and not the past prices. Okay, I like to use Fibonacci numbers for this. So I'll start off with 55. And for 55, we see that when prices were moving sideways, okay, of course, moving averages do not work in a sideways market, all right? It's very choppy. However, when prices are trending, okay, just go further back and look at the trend, you see that the 55 moving average holds price very nicely when price was in an upwards trend. Okay, it holds price very nicely, and in a downwards trend, okay, the 55 moving average holds price nicely. And likewise, when price went the other way again, the 55 moving average holds price nicely. Okay, so I'll use the 55 moving average. All right, and right now we see price actually holding right below the 55 moving average. So moving average confirms it. Let's look at another momentum indicator, the MACD. Right, the MACD, okay, seems to be coming higher. However, the MACD is still below zero, right? As long as MACD is below zero, it means that price is still in a bearish environment, right? Price is still in a very bearish environment. Now, this push up here is made because of this push up here. Okay, we can easily see something like that again, right? Instead of crossing the zero, it comes back down. Okay, so this is a short trade for gold. Okay, a short I would say this probably take for the next 1 to 2 weeks. All right, so this is a short trade for gold. What I can do is I can actually put my sell entry here, sell stop. Okay, so once price were to break below, okay, the reversal is more certain. Okay, we can play all the way down to the daily support. Secondly, the stop loss will actually be the 4-hour resistance level. Okay, why the stop loss is here is because should price break above, okay, three things will happen. Price has broken this descending trend line. That's one. Price has gone over the moving average. That's two. Okay, and the MACD will be above zero. Okay, so we know that our bearish bias is wrong, and then we can go long towards the daily resistance. So that's the alternate case. Okay, so very quickly, the trade for today is gold, right? And we have a sell stop loss order here and a stop loss there with our take profit at the daily support, which falls in line with the 4-hour support. So thanks everyone for tuning in to today's trade of the day. I hope to catch you guys next week. Have a good weekend. Thank you.